Hello everyone, it's the Crypto Cowboy. We are on Monday, January 27th, almost 1 o'clock here Chicago time, and I wanted to start off by saying I couldn't make the video on Friday or Saturday. I was out of town, so just kind of coming here with our usually weekly update on the YouTube channel. And yeah, things are starting to develop as we have been kind of monitoring over the past couple of weeks here. I think last time we've talked, we were must have been a week ago. So when did we do the video? It was I think it was January 17. So the markets were kind of trying to make new highs up here, and we were talking about breaking the top of this trend line and trying to get out of this channel. And as a first indication of more of a solid lows back here into December 2019, and since then we've been correcting. So basically, for the past 7 to 10 days, we've been correcting. We've done this punch through the trend line on a larger time frame, and we've kind of pulled back. We came back here and we retested the trend line, and I have about 3 wave counts here to monitor. I think you guys are familiar with them. I might have switched a little bit, just the counting briefly, but they kind of all pointed to the same direction, and that is up. But they do have a little bit of variation in what's happening right now. And let's start by looking at the green count. So on all of them, we are going from the premise that, again, that we have found a pretty how should I say, maybe medium term or even longer term, let's say low into this December 18. And if you're looking at the green count, I'm counting this as a wave 1, 2, a nice rise up in a wave 3, basically into the 1618 multiple of this wave 1 in green. And very nice target up here. I'm not super happy with the way this wave 3 it's dividing. It is impulsive, however, but there might be a shift in the counting if we're starting to make new highs here, and rather aggressively. But for right now, this is my best interpretation, and I'll show you in the other 2 counts what I mean. So if this is a 1, 2, 3, then I'm having a 1, 2 down here. I'm having a 3, a larger 4 compared with the smaller 2 down here. In time, mind you, maybe travel twice as this small wave 2 down here, but then we have like almost an extended fifth up here to complete this 3rd wave. And now what we're doing is we're doing a correction into this wave 4. And what was interesting and kind of, I'll show you in the other count, as I was posting into our, regular Telegram room, we were just monitoring this pullback as an ABC coming back into this trend line. And, as it was happening, we talked about it, and we kind of pointed the levels where the market is going to be likely to react. Sure enough, it did happen. So there was a little, luck there, or basically the markets just responded the way, Elliott wave kind of tells us that they should. And we've had a nice reaction, a nice bounce up from here. So on this particular count, on the green count, we are looking at this as being an ABCDE triangle. The reason that is because I want this wave 4 up here to kind of go and talk a little bit more with this 4th wave. I'm sorry, the relationship between this 4th wave and the 2nd wave. So I want them to be a little bit more proportionate, a little bit more equal as this is happening. So if you're noticing up here, you have basically, a pretty deep retracement. Let's say that it was, I can do the math here and just go, let me see. Yeah, it was exactly a 618 pullback in a wave 2. And then the market rallied, and we've rallied to the 1618 multiple. And the fact that this wave up here was a, was a pretty sharp pullback, and in form of a zigzag or a double zigzag, you're looking at this, and you want this to be, by the guidelines of alternation, you want this to be basically a triangle or maybe a flat. So for this to evolve as a triangle, we are looking somewhat good. Not extremely happy with the latest rise up here in the C wave, because it's quite aggressive. And a little bit disproportionate. But remember, wave B's, wave C's of a triangle, they could take, several shapes up here. They could be double zigzags, You know, one of these legs could be a little bit more complex. So I want to see how this develops. So I'm going to let it run. But if you notice, basically, on a 3-hour chart, the way we kind of moved up here, you can start to count 5 waves up. So you have an A, actually even to a 2-hour, you can have an A, and then you have an inside here, some kind of a third wave rise in an impulse, and then you have a 4th wave and a 5th wave. So, and interestingly, we've pulled back into the 618 of this wave B, orange, versus this wave A. And, you know, this is kind of a good level, if it is a triangle, for this move to kind of reverse and come back into the C leg. Now, the problem that I have is because the problem that I have with the triangle is that the C leg on a proper relationship with A wave will be a 618. It would be much lower than this at the end of the wave A, so that wouldn't be okay. So this will almost have to retrace anywhere between 38 and 50%, which is totally fine. You know, not a favorite thing, but let's see what happens. So if the market turns back and starts doing a 3-wave back here in a wave C and comes below the top of this wave A, then more than likely we're going to keep going sideways as a triangle. If we're going to break up through here, then this triangle will get invalidated and we're going to switch to the next count. So the idea remains, okay, either a triangle or we're going to break out of here. So we can eliminate this this kind of 4th wave sideways move. Now you can see that as a triangle, we've pulled back, so the market came to the 38.2% right down here at the bottom of this wave A, which is an ideal move for a 4th wave low. Now if this whole thing is a 4th wave, and I'm going to switch to the next count and show you, it pulled back exactly to the right place. Another thing I wanted to point is the fact that we traveled in time, so it's another feature that we use, right, is that you know, how long these waves are traveling, and we've traveled basically about 618 distance, traveled in the wave 2 green versus this 4th green, which happened right here before the breakup. So you had the first wave move up in A or 1, and a B or 2, and then, you know, the rest of the move. So it happened about 618. Ideally you want this to be a little bit larger, so that's why I'm still looking at this as considering a very valid possibility. The ideal trading scenario, and I've posted this into the room, was basically on this pullback. Now, I don't like to necessarily trade triangles, but you don't know exactly what's going to be until obviously it develops. But if you see a 3-wave move into the 38.2, you know, sure enough, or more likely than not, you're going to get a bounce. The trick is that you got to wait for a confirmation first, and that confirmation was a wave A. So if you go up in the room, I wanted to see the move of this wave A go above this latest wave 4. And if you go into the room, you'll see those, notes from me and tweets from me saying that that's what I'm looking for. And then I was suggesting a wave 2 pullback down here to, you know, to get into an entry, to try to get a move up here to the top side. And speaking of all of this, guys, I just want to take here a couple of minutes while I'm talking to you about this, because what I'm saying right now, and the way the way I look at the markets, and the way I explain, what opportunities and trades could be possible based on the Elliott wave principle, it's going to be part of a regular videos and regular posts into the new premium channel that I'm going to open on the Telegram. I think I've made a video about an introduction to the Elliott wave course, and I've talked about opening this premium room. So this is going to open either Wednesday or Thursday. I gotta find out a little bit more. There's a couple of more details that I gotta tune in with the bot, with the membership bot. But this is how my videos are going to be, and we're going to talk a lot about trades and about entries and stuff like that. And then as part of the overall premium service, there'll be several choices out there. But basically the course, I just finished the 7-hour course into the Elliott wave principle, and I have a little sample for you down here. Basically, so this is going to be basically the new room, the Elliott Wave Cafe, and all my posts that I've had down on here so far into my crypto Cowboy Crypto room, they're going to move down into the Elliott Wave Cafe, and it's going to be a lot more details, a lot more videos, a lot more educational lessons about how to trade and how to read the markets in a proper way. But if you're looking at this, this is kind of what I have right now into the crypto room. And this everything that's here is going to move into the new premium room. This is going to become a free room for everybody. I'm going to monitor and moderate this room, and I'll have occasional posts, but all the premium content will move away. So if you can see, for example, down here we were looking at the Bitcoin market, several posts that I've had. I was talking about gold a little bit, and there's about the bonds, about the euro. So you can see down here, for example, on the Bitcoin, right? We were talking about how we're expecting the C wave, to come down into these levels and then turn from here and try to see, what kind of a move we will get. This was one of the posts. Then the move comes down a little bit more, and then, I think this is, again, we're reaching the point. I'm starting to have this first confirmation down here into the move. So all of this, it's basically, going to be detailed and, with multiple and alternate wave counts. So you guys can know, what I'm looking at, how am I going to trade, if I'm going to get into anything. And so a lot more about that. But here is basically a little sample onto the Elliott wave course. Let me just find it here. And I have it right here. So basically what I have, it's about 7 hours long, and it starts with an introduction. You guys seen this introduction on the YouTube, but I want you to go through it because I want you to learn about the history. I want you to know what the basic patterns are, especially if you're a beginner trader, and see how everything kind of relates together. And then I take each pattern and I start to dissect each pattern. I go into each one in details. I have PDF files. There are all the way towards the bottom here that you can download. And there's 7 to 10 pages on each course, with PDFs about how the waves are moving, Fibonacci relationships, how to trade, all this stuff. And it's all on there. You can download it. And then this is, so I'm going basically through, impulses in details. I'm going through diagonals in details. How do they form? How do they look? How many kinds? How deep do they pull back? What to expect once they're completed? And, all of them in details in there with charts and, also simple drawings that explain everything. So then I talk a lot about the zigzags. You can notice these are about 30 minutes long. Then I move into the corrections. I talk about flats, multiple corrections, what type of flats. Then I talk about triangles. I talk about combinations. This is a big lesson on combination. I have about 35 minutes because I know, a lot of people are interested about, how they work and, how they form and how many kinds and, what they are. And then I talk, this is almost an hour long, about fibs and ratios. So this is about, how far the moves are retracing, what are the multiples. I talk about fib times. I talk about, all the relationship between the waves. And, so there's a lot of information here about fibs, which you're going to like because you will see how amazing the market moves and how well it responds. You'll see plenty of examples there as well. And then I have a bunch of other practical tools. So this is almost another hour of tips and tricks of the trade, and a lot of stuff that's not talked about out there in any other courses. You're not going to find a lot of this stuff in the internet out there or on the Elliott Wave world. But this is, almost an hour of really, really good stuff. And then in the last part of the course, I talk about how to trade the waves. And I give you, a lot of examples. I take each pattern individually, how to trade it, which are the most important ones. What are the best trades to take? What are the, the less likely ones to happen? What you want to stay away from? Where to place your stops? What are the best entries? How to trail a market and all that stuff. So this is almost 90 minutes long. So, a lot of information. I suggest people that are, new, obviously, and people that have a little bit of experience in the Elliott Wave to take the course. The course is going to be free if you participate in the room. I think it's, one of the options I have requires a 3-month subscription. The other one requires about 6. But then I also have like a regular monthly price, and I have also a trial. You're not going to get the course with the trial, obviously, because it's just a 2-week trial, and I put a lot of time into this course. But I'll have more options when I'll send you the links for the new room. So, I'm excited because I think this is going to help a lot of traders, and, you're going to see, if you study this in detail and are patient, you're going to see how much it's going to help you in your trading. Okay, so let me go back here to the charts really quickly. So we were talking about the green count. Looks like the Bitcoin is breaking up a little bit above 8,800 as I'm talking here. So I'm going to move to this count which is the blue count, where I'm actually looking at this wave 4 as being complete. So we have a 1, 2, and then we've done third wave into the 1618 multiple of 1. We've pulled back clean, Elliott wave, pullback, and a fourth wave to 38.2. We just tagged it, and then now we move up. So if we move up, then we got to get up impulsively and start building this fifth wave up. You're going to look at this fourth wave and look and see that it's almost similar to the second wave. Now it's a little sharper, right? So I'd like to see this alternation. If this one, it's a little bit more sideways and a little bit more timely. This one, it's a little sharper and a little bit less time. So I'm okay with that. I'll give it, in this case up here. So I'm not going to say that it's not a fourth wave. It's totally legit. And especially if the market starts to move up in a 1, 2, and now we're doing a big 3 wave up, we're pulling back in 4 and do a fifth as part of a wave 1. Or if this wave 3 extends longer, then we do a 4 and do a 5 to complete this somewhere anywhere between 38.2 wave 5 versus distance traveled into the wave 1 through 3. So some of these things you will see in the course, and you will see why I'm targeting fifth waves, where I'm targeting them. I have plenty of examples and explanations of how we use those, and depending on the size of the third wave or the size of the first wave, all of this interrelates into your targeting zones. And so this way you don't get scared out of the trades and you stay in and you're able to profit, okay? So, for example, if this is going to be a fifth wave, I'm looking anywhere between 38.2 and 618 on a multiple of distance traveled between wave 1 all the way up to the third wave. So, again, you can see the time relationship appearing to the 618, and I'm curious to see how this develops. So I do remain bullish here. I'm interested to see what's going to happen after we take out the 9200 zone and how much strength this market is going to have, if it's building something else or if it's just a fifth wave, and then we're going to get a correction. All right, so I'm going to go back now and talk to you about the red count. I think it's a little bit off the camera here, but this is the red count that's a little bit more aggressive, a little bit more bullish. And I've introduced this one, I think about probably a couple of weeks ago. And I've had a 1, 2, and then I've switched this from a third wave to another first wave. What I do like in this one, I like the proportion between this wave 2 and this wave 2. So it's smaller, which I like. Also, it looks like a zigzag, which is supposed to be as a wave 2. When waves 4 are more triangles and flats, wave 2s are zigzags, double zigzags most of the time. So, the only issue I have, which is small, is the fact that we've pulled back in a 2v1, distance traveled in this wave 2 versus wave 1, only 38.2%. Now, when I say the issue, I mean wave 2 are usually deeper. Now, if it's a wave 2 of a lesser degree, that means that we're getting a third wave that's going to be pretty huge. If you're only pulled back 38%, because if this one pulled 68%, 61.8, and this one pulled 38.2, that means that we're about to explode higher in a third of a third. So that's why I have this red count, and I want to allow myself for this move to continue all the way above $11,000, $12,000. Now, this is going to have to happen in 5 waves. So at some point here, we're going to have to finish this wave 1 green. Now, if you look here, you have a 1, 2, maybe a 3. We'll see how far this goes. Maybe 4 and 5 would tip our head above this 9200 zone, and then we pull back in a second wave. I want the second wave obviously to be even smaller than these two, and that's going to mean that you're going to have a 1, 2, 1, 2, and 2. Now, these are super aggressive, and that means that Bitcoin is about to rise, strongly after we complete maybe another pullback. I'm not very, even though I talk a little bit excited about this, I always kind of keep this on a reserved kind of factor, because 1, 2s, 1, 2s, and 2s are rare. They're like winning a lottery, and they don't come across very often. But when I notice that the market tends to shape in such a way, and we haven't had such a move in a long time, that means that the market, that it's okay for the market to start breaking out aggressively, and really, give us reason to believe that, yeah, we're embarking into the next bull market. So I'm not going to dismiss it, but I keep it as a third count here, after my green and after my blue. But it looks like this blue count might take the front stage here as a primary, if we're going much higher up here into this, B wave orange. Another possibility that I don't have on here, and I'm going to just kind of draw it for you, quickly is the fact that this could be an X wave. So what this means is that this is basically an A, B, C for a W. Okay, this is going to be an X wave, and then we're doing another A, B, C down, okay, for Y, and then we go back up higher. Now, just by drawing this, you can see how I'm kind of drawing it proportionately with the W wave. This fourth wave is going to be pretty long compared with the second wave. So if it hasn't happened yet, I think it should have happened a little bit lower down here, and then we should have gone and done this. You know, the fact that we've broken up so higher up here with this X wave compared with the top of this B wave leads me to believe that this is not going to be an X wave. I'm not going to dismiss it yet. If the market gets above here, then it won't be an X wave. So that's just another kind of alternate scenario that I'm counting on when I analyze the market, to make sure that I'm not kind of leaving anything out and I'm not getting myself surprised. And this is how you look at the markets. Also, this is part of a course as well when I talk about primary and alternate counts and how you keep them on the back burner and you look at them, just so you can prepare yourself for any other moves, or if you have possible multiple accounts where you trade different things, but that's a different story. So this is what I'm looking at. Now let me quickly jump before this video gets way too long. We're about at the 20 minute. I want to look at a little bit at the candles, and then I'm going to look at some moving averages. So if you look at the weekly chart here, we did break above the channel, right? And we've had a pullback here. So this was a nice weekly candle. We had a pullback. We kind of closed a little bit below it. And right, this is a little bit subjective, so you can, pull it a little bit away to the top, or if you use a line chart, it's a little bit different. But, anyway, there wasn't necessarily a big aggressive break out of this trend line with the full bullish candle that's, kind of looking like this one that's closing up here. But I think what's happening right now, we are breaking. It seems that we are breaking out higher, because I was actually looking, if it was going to be more of a bearish move, I was going to look for more of a pullback down here like that, okay, but that didn't happen, okay, and it looks like, this candle is actually breaking up above the top of the candle from last week, and this is a pretty interesting bullish sign. You also have this rejection up here that's happening, so that happened last week. So, I'm excited. Let's see how this week it's going to go. Jesus, I got to take out these notifications from the room. That's one thing. And then, I'm going on the daily charts. I've had this kind of, pullback, with the arrow. I think it was when the market was already pulling back following this candle, and I wanted to see how deep it goes. But I was, kind of counting on this retesting of the trend line and then a move higher up here after we're retesting it. So it looks like we're getting nice impulsive candles here on the daily chart. So let's see how they close and what's the resolution on this. And then the other one that I'm interested in, it's obviously the 20-day moving average. I don't pay attention to averages a whole lot. I don't use them, as part of my analysis. The only one that I look at is the 200. It's something that I think the market tends to respect a little bit more than the rest. And, you've noticed how you've kind of had reactions, when it touches it. So right now, on that first reaction, on the first bull market up, we kind of poked our heads through it, came back, and now we're retesting it again. Now, if you look at the 55 here, it's kind of turning. And from a dead cross, as they call it, when 55 passes through 200, you can look at the golden cross when 55 or 50 passes through the 200 as well. So it's something that could happen. It's just little bonus talk here. I'm not a big moving average guy. These are lagging indicators, so the price is the king, and that's why I like using Elliott waves, because I get more information from there. But this is just another tool in the arsenal, and you get a little bit more confidence into your own analysis, and if you combine it with Elliott wave, it can lead to pretty good results. So this is all I have for you guys this week, and like I said, I hope you come and join us into the new premium room. If you're a new trader and want to learn a lot about Elliott wave, that's the perfect place to do it. If not, you can try our free room. I'll be able to try to post some there, everything, every once in a while, different things. Give a try to that course, see how you like it, and leave me any questions, messages on the channel below. You'll see all the links down there. And don't forget to hit the thumbs up button, and I'll see you guys next week. Thank you very much, and have a great rest of the week. Have a good trading week.